Hi, welcome to an Easy Trader update on Thursday the 20th of June. This is Kim speaking. Okay, in this update I really want to cover an educational article as opposed to too much on the updates on what's happening in the markets. We'll have a brief analysis in a short while, but what I wanted to just show you was, or demonstrate, was an answer to a question really. Now, I was asked whether if someone is intraday trading and they're looking at the 2-minute and 5-minute time frames for divergences, do they need to have divergences also on the 15-minute, 60-minute, 240, etc. as well to confirm the divergences on the short time frame, because obviously short-term divergences are weak. Well, it's not quite so obvious actually. Now, in fact, I only ever trade divergences off the smaller time frames. Now, before I get into majorly on divergences, the thing with divergences, they're counter trade. It's counter trend trading generally, or often. So often you're going against the flow of the trend. Now, I only have specific times when I'll take counter trend trading unless I'm scalping for just a few pips. In the main, I will be looking only to, as I say, to trade them. I have specific time frames when I will trade within them, and it depends also on the movement of the markets. There's quite a lot behind it, so I'm not going to go into massive detail there. I really want to answer the question in terms of why and what I'm looking for here, and just show you some of the power behind them. Now, obviously, on the small, when you get a divergence on the smaller time frame, generally you can get a smaller move. However, a small time frame divergence can lead to the top or the bottom of a particular range in the market. All the divergences, for those that are not so familiar with them, is basically here where we put a low in and then we put another low in. In fact, why not look at the current situation? Look, we put a low in a short while ago. We've just put another low in, and what we've got is an RSI which has come down to around about the 20 area. For me, again, my rules is the first touch has got to come down to at least a 20, down to the 20, or if it's bullish, it'd be at least up to the 80. But it's got to come down to the 20, and then the second move is the price has come down lower here, but the RSI is diverging. It's in fact, you've got one going one way. Now, some people will say, well, that's converging because you've got price coming down and RSI going up, but just the term is divergence. And in effect, that one thing's going one way and the other thing's going the other way. It's not confirmed. It's not confirmed. Confirming the move. Now, what this is suggesting, this is higher strength coming in, and yet price is going down. So this strength, what it's just suggesting is there's strength coming into the market in terms of what's happening here. Now, on a divergence like this, again, I've got whole rules about when I'll take a divergence. Here, I've got a completely empty chart, a blank chart on the price here. I only take divergence trades into support, in terms of buying a position, or resistance. So it's got to have resistance at the top, strong resistance or strong support, and it's got to have a number of factors around it in terms of the time, etc. So it's not, I'm not just buying or selling at any time of the day. Unless, as I say, I may take the occasional scalp, but there's times when I'll buy and hold much longer. Now, this wasn't one of the times I would be holding or even trading it, although we in fact had a double divergence here. We hit, the RSI was going up and up from this one and this one, the price was going up, and we got a reversal in. Now, on this time frame here, as I said, one of the parts of the question, are they weaker? Well, they can be weaker, and we had a decent retrace here. In terms of numbers of pips, let's just get rid of this and have a quick measure. This is going to give me a brought the measuring line over. Just one moment. There we go. Hopefully, let's just bring the ruler over, and it moved up around about 35 pips from the bottom to the top of that move. So it had, from an intraday trading point of view, that was a reasonable move upward. Now, for me, it was the wrong time of day to be trading it. I've got, as I say, specific rules around it. There's a lot of downward momentum within the move, so it's not something I'd really want to be getting into at this stage, and certainly not this one that's just occurred. probably whilst I do this recording, you'll see this one. It diverged. It's on a 5-minute time frame. It will probably disappear very soon. At this rate, it's looking like price is still coming down, and this is part of the reason why I don't trade at this time of day divergences. But it's the main question is about divergences, and do I need them on bigger time frames? I'm going to come out to a 60-minute time frame. Now, I don't trade divergences, funny enough, off big time frames, because I'm an intraday trader. I would not look to trade. There was a marginal divergence between. Let me just put arrows on here or something for you. There was a divergence between this high here and this high here, this higher high, and there was an RSI divergence, a slight divergence across the top there. But I'm not looking to. I won't look at trading the hourly divergences or 4 hourly divergence or daily divergences because of the size of the stop that you have to apply. When you get the divergence, this may well have been diverging at the beginning of this bar here, about this level, but it's then gone on for a good distance more. It can go on 50 to 100 pips or so, or 200 pips, 300 pips beyond where you started. So for me, that's I don't want to be using that size of stop. Now, if I just roll this back a bit, there was an example I saw a short while earlier on here, actually, and I just thought, well, actually, let's drill down in terms of, there we go. We've got another double divergence going on across here. Let me just highlight it. And it may be something at this point here there's a divergence going on, but it was around about 2 o'clock in the morning, and I'm not often up these days at that time. But you had the price going up twice here, and you had the RSI coming down. But for this one here, by this point, at this point here on a 60-minute chart, I think it was 7 o'clock in the morning, we'll check it in a moment, you see the price was divergent. Again, I wouldn't be taking that off an hourly chart. However, I think the real question is, will you take them if they're shown on an hourly? If it's starting to show on an hourly chart when it's up there. Is it worth drilling down and taking them on the shorter time frames? And I think the answer is turn it around. I'm not waiting for a divergence on the big time frame. However, if there is a big divergence on the big time frame and it's showing also on the shorter time frame and it's at the right sort of time of day, yes, I'm interested. Now, this one was at actually it's 10 o'clock by the time that happened. What time was the first one? At 4 o'clock, 10 o'clock on this second one. But what we're going to do is we'll look at 10 o'clock on the 11th of this 6th. So we'll, but we're going to go down to a 2-minute chart. Not necessarily a time I would like to be trading. 11:06, 06, and we'll go to 10 o'clock. And on a 2-minute chart, and this is what we had. So the 10 o'clock within that, this is the high of that period, and there's the divergence. So you had a divergence running across from the high, from the initial high here to this point here. It diverged. Now let's say it's out of my time frame, but however you can see it came down nicely there, but it actually had a pretty decent move from this move. So it was diverging on the big time frame. It moved 27 pips almost. I mean, even if you got 20 of those pips, there was a reasonable lower time frame movement. So I think in answer to the question, yes, you can take them off the 2 and 5 minute time frames. They work particularly well off 2 to 5 minute time frames. In terms of the times of the day, as I have specific rules in terms of when I'm trading them. I also, if you're involved and you've looked at our momentum stuff, and particularly what Charlie talks about in terms of the momentum of the moves and the band trading he has, I'm really aware of what's going on there as well. So I'm trading. I prefer a divergence that came through almost in line with the bigger move as such. So if you've got a divergence on a 2 minute time frame onto one of Charlie's lower bands on a 30 or 60 minute band coming in, that's beautiful for me. I'll take that one because the bigger trend is upwards. I do like to trade them generally in terms of trend, although they are counter trend trade, of course. So you can use the big time frames for trend and stick with the trend and trade off the small time frames, or you can just take off the small time frames at certain times of the day. So yes, 2 minute, 5 minutes, they can be powerful. This one particularly was powerful. If we just come back to the 60-minute chart, I'm just going to look at a couple of highs here. Let's take what date was this high here? 7 o'clock on the 13th of the 6th. Now, before I just go into it, I don't think there was any divergence actually. RSI on this, I'll take it off the green candle, although the other one went fractionally higher, but the trouble is the divergence changes. There was a divergence between the previous candle and this one at 2 o'clock in the morning. 13th of the 6th at 7 o'clock in the morning. Let's just check the divergence, 78.6, 79. So there wasn't actually a divergence, but let's just look at the high here at 7 o'clock when it made this new high. 13th of the 6th. And we'll just switch it to a 7 o'clock bar. Oops, let's just better change it and then do that to 2 minute time frame. Go to 13th of the 6th, 2 minute. Okay, so 7 o'clock. This is the 7 o'clock bar. Okay, now this one, it comes into a time frame when I'd be much more interested in trading it. If there's resistance at this point here, I'm interested. So there's a clear divergence. I'll show you the divergence. So this is a high with no divergence necessary on the bigger time frames, but lovely 2 minute divergence here, and most likely 5 minute divergence. I'll come to that in a moment, but very clear divergence. The RSI hasn't got overcooked either way. It's just nice. It's gone well above the 80 there, not far off the 90 level, which is, I prefer that even more when it's done such a big push up. But at this time of day, and you can see it's been pretty flat until that point. We've had a spike out. I'm happy at this one, and subject to the points of resistance. Would be looking at this, and yes, it didn't come down straight away. It went out. It did come down, popped back up, but look at the movement that came from it at the right time of day, and I prefer that one. So anyway, a couple of examples. Hopefully that makes a bit more sense and answers the question that I was asked. Okay, quick look at the markets. So looking at cable first, big sell-off yesterday evening with the FOMC comments by Ben Bernanke and co. We've seen some follow-through of that this morning. Cable's actually held up relatively well this morning. It's pulled back quite a bit here. It's had a bit of a retrace and is certainly looking probably one of the stronger opposites to the US dollar. So the pound is looking stronger against the dollar, or one of the stronger currencies against the dollar at the moment. It's still got some potential to come down some more, but we've got some key support below, and I would be looking at the key support levels around about the 53.74 area, 73.74 area, at maybe at the right time of day of catching a long off if it were to come down there. Key factors here really now is whether it can put a reversal in today and look to break some new highs. It was struggling earlier this week. As I say, yesterday it's sold off really strong. It's whether or not we can break this previous high here, or whether we're going to just sit in a very tight, big range that the cable likes to sit in for long periods. Let's have a look at euro. Oops, sorry. Euro dollar. It's actually now made a nice 38% retrace. This is one I was looking at earlier. Let's cut that off there. The 38% retrace of the move at the moment. Still looking like it could do some more yet. It's breaking through some key support areas here, and it may want to come down even further yet. We've had a decent range down so far today, but it's, as I say, to me it's certainly looking like it could continue in that vein. It's looking weak on the shorter time frames. There's no sort of real strength. It may be coming a bit oversold or whatever else, but from this daily point of view, we've got plenty. I mean, it's been relatively overbought in this move up here, so we could have a bigger correction and maybe even back down to the again the 50 MA around the 130.79 area. Euro yen. Yen got sold off quite a bit. We've seen the euro make benefit of that, but it's pulled off now. It ran into the daily 50 there. It's got a bit of a bloody nose and come off that quite strongly. It's still potential for it to push up some more, but it may be that the yen may still want to strengthen a little bit more here yet. If you look at the dollar yen's held up a bit better, but again it's pulled back. Still got key resistance. It may push up to the daily 50, 34's above there as well. So there's some quite key resistance here. But this may just be a correction wave and a bigger move south. So we could yet see some further move down. The thing with all of this news, bearing in mind there was expectation of some tapering in the FOMC minutes and reports that came out yesterday. It's not really done too much that was unexpected. It's just that markets reacted to it as it is at the moment, but it could well settle down, and it's all very dependent on good US data coming out. So if the US data starts coming out poorly, we could see a continuation, a strengthening of the yen against, for example. So the dollar yen may go down yet. So all this can happen. So it's all very much on a bit of a knee-jerk reaction at the moment, I would suggest. Okay, that's it for me for the markets. I'm not going to go on any longer. Kevin will be back, Charlie will be back on tomorrow morning as ever with his live trading, hopefully. I'll catch you next week. Take care. Bye for now.